All right, so it's a brand new trading week right here in Nigeria. Let's get a sense of opportunities in Nigeria's capital market and possible hedges at this point against currency devaluation and high inflation. Well, joining us for this conversation, we have Mr. Nnamdi Wizo, CEO of Commercial Partners Trading, joining me via Zoom. Great to have you on the show. Hello, Nnamdi. All right, Nnamdi, maybe you might have to unmute. All right, let's try this again. Great to have you, Nnamdi. So definitely it's a brand new trading week right here in Nigeria, but a lot of issues to unpack right there in the capital market. We've seen FBN Holdings, they have a proposal for their rights issue. They also have a new group managing director and a planned name change. How are you seeing all that's playing out with this company? Hello, Nnamdi. I can't seem to hear you. I see your mouth is moving, but I can't hear you. We'll try it again. Maybe you might have to unmute again. But yeah, as I said before, so much playing out in our markets. And from last week's performance and the equities market, we did see a positive gain regardless of the losses, about 3 trading sessions of losses. But we're seeing the market did bounce back with the last 2 trading sessions, and we got a positive close. So a lot to look out for this trading week. Not a lot of economic data to look out for, but definitely it's all about what's going to happen next at the next MPC meeting. It's still about fighting inflation. What's the MPC going to do next? We'll definitely find out about all of that. But let's try and get Nnamdi on again. Okay. We'll try and get Nnamdi back on. Definitely. So much playing out for this week. If you're looking at opportunities in most of these markets, everyone's trying to find out with what we're seeing with geopolitics in the Middle East and with rising cost of living right here in Nigeria. We're trying to find out what's the best investment hedge. We're going to be talking a lot about that. But last week, I was in Nairobi, Kenya for the Accelerated Partnership for Renewables in Africa Forum. That's APRA. The government of Kenya and IRENA did co-host the first forum as of October 14 to 16, 2024 in Nairobi, Kenya. Here's a summary of what played out.
Advocating for a faster shift to renewable energy. During a 3-day investment forum in Nairobi, Kenya, these leaders highlighted the numerous advantages of moving towards renewables.
Together, we can innovate on how to overcome barriers and show that we can be faster and more impactful when working together toward the same objective. I'm confident that this forum will result in concrete outcomes.
The forum, hosted by countries involved in the Accelerated Partnership for Renewables in Africa, APRA, brought together ministers, investors, developers, and financial institutions.
Accelerating the deployment of clean energy solutions is not only essential for tackling the climate crisis, but also for promoting inclusive economic growth and improving livelihoods across the continent. The success of these efforts, however, depends on sustained public and private investment in clean energy development.
Stakeholders highlighted Africa's slow investment in renewable energy investment. In the various panel sessions held, the consensus was Africa needs access to affordable financing.
When it comes to hydropower, and we've been looking into this issue for a few years now, about half of Africa's hydropower fleets is in need of rehabilitation, and a good chunk of it is outright sort of run down and needs sort of serious sort of rehabilitation. So we're looking to support also modernization of existing legacy hydropower assets.
I think from a mega point of view, where we engage in projects, it's typical, as I mentioned, guarantees or de-risking are not necessarily band-aids.
At the end of the three-day APRA forum, stakeholders went away with two major points. Africa cannot be left behind in this energy transition process, and even though investment in renewable development has increased, investments need to be ramped up to keep global warming below the 2% target. Ladi Williams, reporting for Channels Television News.
Right, and definitely with the grid collapses we've seen so far, it also talks about also putting in some renewable energy sources with the grid mix to actually help with some of these collapses. But a lot to talk about there, and a lot of investments need to go into that. But let's try and bring in Nnamdi Nwizu again now. He's the CEO Commercial Partners Trading. Hello, Nnamdi. Let's try this again. Can you hear me?
Hi, sorry, I think I had some network issues.
Fantastic. So I can hear you now. So I was talking before about what we're seeing with the FBN Holdings, the rights issue proposal. They also have a new group managing director and a possible name change. How are you seeing all that's playing out with this company?
Well, I mean, so far it seems to be good, seems to be great. In fact, if you look at their results that they released, half year, you've seen the profit grow by about 92%, which means they seem to be getting something right. And we've also seen them try and change the strategy a little bit with the sale of FBN Quest, which is more or less like their merchant banking arm, and trying to focus more on core banking, core commercial banking. And with the appointment of their new GMD, I think it's all part of their strategy to try and refocus. Wale is a fantastic guy. In fact, I was one of my first bosses when I worked in GTB. There's somebody that I know pretty well, and someone I know is extremely capable, and will be able to, lead them in the right direction, or lead them in the direction that they want to go. So I think that was a great decision from them.
Right, and definitely, coming into a brand new trading week, we're seeing last week, even though the Naira lost for the week, there was a big gain there for the Friday session. And we did hear the CBN governor, he did say a weak Naira is opportunity for exports. But in your view, when are we going to start seeing this, opportunity really play out, for having a weak currency at this point?
Well, I mean, I agree. If you look at countries like China, they tend to try and devalue their currency to make their exports a lot more attractive. The only challenge that you have with Nigeria is the fact that we don't really export a lot. I mean, beyond crude oil, which is priced in USD, already. So, I mean, that doesn't really help us with regards to the value currency. But I think with what has happened, what we need to try as much as possible is to focus more on the fiscal side to try and encourage, manufacturing companies to set up, encourage production, so that Nigeria now starts to export more. That is when the weaker currency, right, the depreciation of the currency can actually help us. So at this point in time, we are still largely an import-dependent economy. So the thesis around, or the analogy around, being able to encourage export, it will not really be felt at this point in time. I mean, yes, we've seen things like customs revenue increase, but the truth about it is it's not increasing because you've had more exports. It's just increasing because you've depreciated the currency. So government is earning more, but not from production, but just from the move in the currency, which really is not a sustainable one. So we need to try and get Nigeria to start producing so that we can start exporting a lot more. By the time you get things like power rights, you get transportation rights, transportation from, for instance, the farms where you have agri products being produced down to the ports where they're going to be exported. By the time, I mean, you see Nigeria has a lot of livestock, cattle, but we have very few ranches set up for this. And these are the kind of places that we need to look at and say, how can we improve, around these areas? There's no reason why we shouldn't be talking about exporting Nigerian beef. When people go to restaurants and they're looking for, say, for instance, you want to buy steak in Nigeria, people focus more on the imported ones versus locally produced steak from Nigeria. Because, I mean, we don't have a proper ranching system that will help us develop the kind of quality of meat that you need. As an example, and that's such a low-hanging fruit.
All right, let's also look at FDI. how does a weaker currency, how does that influence FDI inflows into a country? We did see our FDI did hit a new low from the last result we got.
Well, ideally, it should, because, I mean, for those who are coming to invest in government securities, those who, I mean, when they come, they buy the Nigerian currency. So what they could get with $1 million, say about 7-8 months ago, a year ago, would have been about 700 million naira, right? Now they will get 1.7 billion, as an example. So you would see that doing this, devaluing or depreciating your currency, would more or less make it more attractive for FDIs to come in. If you look at those who are coming to invest in critical infrastructure sectors in the country, and they are looking, you know, how much can my $1 million take me, or where can my 10 million or 100 million take me? They can get a lot more in terms of value from their currency when they convert it to the naira, and be able, you know, to basically come in and buy up Nigerian companies, as an example, and that would help them, or that would make Nigeria look more attractive. The flip side, however, would be that they would also be worried about what happens with the currency in the mid to long term, because if you come in and you're going to be here for 5-10 years, you don't want to come in and then you come in with $1 million, your business grows, but you suddenly realize that in 10 years' time, if you decide to sell and get out, your $1 million now ends up being $100,000. So yes, it helps them come in, but they also need a bit of stability so they know that they can plan when they're coming into Nigeria.
All right, so looking at the global space this time, we're seeing weak demand in China. We're also seeing Middle Eastern geopolitics in the Middle East. You know, looking at all of this, Blair, do you think some kind of bear market might be brewing, you know, in the global space that could impact risk assets, you know, going forward?
Ideally, that shouldn't be the case, because ideally you should, I mean, you have the Fed beginning to cut. The Fed cut 50 basis points. The ECB cut again, just I think the tail end of last week, either Wednesday or Thursday, they did I think it was 25 basis point cut. We expect the Fed to cut rates again when they have their next meeting, which ideally should spur growth, right? Lower cost of funds means that people can borrow to ensure that they, you know, invest and help, you know, grow the economy and grow the GDP. However, the worries that people have is the fact that market has been tight for so long with the increases from all across in rates by all the central banks, that you're now at a point where people are worried that they might have kept markets tight for too long, and that by the time they start to ease, we might not be able to avoid going into some sort of global recession once again. But also, they need to be careful in terms of the Fed and ECB that they don't cut too aggressively and end up spurring inflation once again. So it's trying to find that fine balance between the need for growth and also trying to ensure that you don't come and encourage or spur inflation once again. So we're not officially in a bear market, but you know, we will continue to see the Fed or the ECBs and other central banks gradually reduce rates, checking the parameters, trying to ensure that they are getting the rate reduction right. Then we should be able to avoid that supposed bear market, because lower rates should be good for equities market, lower rates should be good for the fixed income markets, lower rates should be good for things like you know, utility companies in the US and I mean all across, and also should be good for sub-Saharan African countries or emerging market countries. So I think that if they get the rate cuts right across by most of the central banks, right, globally, then we should be able to avoid that bear market and start to see the economy and GDP growth start once again.
All right. Yeah, thank you so much. Always great to have your perspective. Nnamdi Wizu, CEO, Commercial Partners Trading. Thank you so much for coming on.
Thank you.